We've seen the flag pattern in a schematic diagram and how to identify the components within Bookmap. Now let's cover how to grade this setup, offering us a potentially higher probable outcome. Then we'll consider trade execution. In the previous video, we identified possible trap traders. We want this within our setup. They offer the potential fuel for the ensuing strong impulse move. The buyers are here and the sellers are here. How good is the potential trap? Compare it to the previous volume. Is it heavy volume within a rather tight consolidation? Yes, this looks excellent. If price breaks the range, then we anticipate a strong impulse move. We've identified potentially trapped traders and developed scenarios on their actions if price breaks out or breaks down. Let's also target where price might go. Let's take a measurement of the consolidation and derive where price might go on a breakout. Measured moves can work for a number of reasons. Typically, there is a market breadth of volume pressure. This is why average true ranges can work. Do we see a potential move to reach high liquidity within the measured move? Yes, it's here and it looks pretty good. Next, let's grade the impulse move. Is the move strong? Is the angle steep? This means it is a powerful move which is needed to pull away from the consolidation area. Do we see strong and consistent relative buy volume within the expansive move? Yes, but it would be better to see even more volume. Next, as price discovers higher levels, do we see absorption by high liquidity on the offer? Does it match our measured move? Do sellers begin entering? Yes, it would be better to see larger high liquidity here, but we see it transacted and sellers begin to enter. On the pullback, is the retracement a minor move? This is important. We want to be on the side of the strong impulse move and we want price to accept higher. This looks quite good. Secondly, is there low relative volume within the small price range with few sellers? Looks good. Next, at the bottom of the pullback move, do we see large liquidity bidding at a higher level or exhaustion? Yes, we do. In fact, this liquidity bid even higher here and also transacted. This is potentially even more trapped sellers. We need one more key element to fully grade our setup before entry. Do we see large buy volume curl back into the pullback range above the selling? Yes, we can see it here, and it looks relatively strong. This is the initiating volume for the second impulse move. We have identified the behavior of the other traders to help us better choose a higher probable outcome. Look to enter long here. Avoid entering higher in order to reduce risk. Place your stop loss here below the range. You are looking for this to work immediately. If it doesn't work, then reduce your risk by taking the small loss. Now let's grade our potential exit and place our take profit orders. Is the second impulse move strong? Is the angle steep? Yes. Is there strong volume on the move? Yes, it's even stronger than the previous impulse move. Does a potential measured move coincide with the area of high liquidity? Yes. So let's place our take profit here, near our measured move and high liquidity level. Do we see absorption or selling enter? No, not yet. So we can hold our trade and manage it until we see absorption or heavy selling. Please note, these are only concepts. It is not financial advice nor a trade recommendation. It is a starting point for you to backtest your strategy and develop your own setups. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.